The Ichimoku Cloud indicator. Developed by Goichi Hosoda in the late 1960s, this indicator is one of the most popular technical indicators to ever be created. Even by itself, the Ichimoku Cloud can be pretty decent. But did you know that there is a newer and improved version of the Ichimoku Cloud that basically takes its functionality to the next level? Well, if you didn't know, then this video is for you, because we're gonna explore that exact indicator. Let's get into it. Now, the new and improved version of the Ichimoku Cloud indicator is called Super Ichi, which is an indicator developed by Lux Algo. To add it to your chart, you want to go to TradingView, which is the trading platform that I normally use. If you need to sign up, the link for that will be in the video description. And then you want to load the 4-hour time frame of AUD CAD, but you're not going to be limited to this because this strategy can actually work on any trading security and on any time frame. And then click on Indicators and type in Super Ichi, and it's gonna be this one by Lux Algo. Now, the Super Ichi indicator by Lux Algo is a revolutionary adaptation that integrates the power of the super trend indicator, enhancing the traditional Ichimoku Cloud for today's volatile and ever-changing markets. This innovative approach uses the super trend indicator at its core, which leverages the average true range, the ATR, and a robust trend detection method. Now, unlike the traditional Ichimoku Cloud, which relies on fixed window sizes to determine highs and lows, the Super Ichi indicator adapts to current market conditions by incorporating the ATR and the super trend setting. This modification allows for smoother transitions between bullish and bearish trends and reduces the likelihood of whipsaw signals, making it more reliable during volatile markets. Next, we will go over this indicator settings to see what customization options are included. But before we do that, let's first of all explore this indicator's components. Now, just by looking at it, you can see that it's much cleaner compared to the traditional Ichimoku Cloud indicator. Its first component is going to be the Super Ichi Cloud. This cloud is used to track bullish and bearish trends in the market, and it can also serve as levels for support and resistance. And then we have the Tenkan-sen line, which is this blue line right here. And then this yellow line is the Kijun-sen line. These two lines are super responsive to price changes and can be used to track short-term trends in the market. And we're gonna go over how we can do that later in the video. And then we have these blue and orange dots. These are basically crossover signals. A blue crossover signal like this is going to be printed whenever this blue line crosses above the orange line. Conversely, an orange signal is going to be printed whenever the orange line crosses above the blue line. Now, if we go over this indicator settings, you can see that on the Inputs tab, you can change the ATR length of the Tenkan-sen line as well as the ATR factor. Same thing with the Kijun-sen. You can change the ATR length as well as the factor. And again, same thing here. And then here we have the displacement, or basically the number of candles that the Super Ichi Cloud is going to be offset into the future. On the Style tab, you can change the colors as well as the display style for all these lines. For this video, we're going to be using the default settings because I think they're pretty good. But if you need to change anything, well, now you know how to do that. Now, one of the methods of using this indicator to trade is really simple. You basically wait for the price to pull back into a green Super Ichi cloud, and then during the pullback, it shouldn't break and close under the cloud. After the pullback, you want the candles to go back up and close above both these two lines, as well as above the green cloud. After that, you enter your long position, and you make your massive profits. Conversely, for a short position, you wait for the price to pull back into a red Super Ichi cloud. During the pullback, it shouldn't break and close above the cloud. After the pullback, the price needs to go back down and then close under these two lines as well as under the cloud. After the close, you enter your short position on the open of the very next candle. However, based on our backtesting, a strategy like this would only make you so much money. In order to be super profitable using this indicator, we have to use a more nuanced approach to taking positions. And I'm going to show you exactly how to do that in the next few seconds. However, for now, let's talk about the Forex broker called hankotrade. Now, I've been using hankotrade for quite some time on their web trader platform. As you can see, this is my account. The reason why I think hankotrade is a great broker is because of their low commissions as well as spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is actually the lowest spreads can go. For those of us who love high leverage, well, hankotrade offers a maximum leverage of 1 to 500. And if all of this isn't enough, they're also going to give you a 100% deposit bonus for all your first deposits of between $100 all the way to $25,000. So if you deposit, say, $3,484.50, well, they're going to give you a bonus of $3,484.50, giving you a total of $6,969 to trade with. To access the bonus as well as all the other perks, well, sign up to hankotrade using the link in the video description. Now, back to the video. Now, it's time to go over that other strategy that I promised I was going to tell you guys. So let's take a look at a long trade example. Now, the first condition is to ensure that the market is in a bullish trend. For that, you just make sure that the super Ichimoku Cloud, this one right here, is colored green and the price is trading above it. This indicates a bullish trend. Condition number 2 is we want a pullback to happen within this bullish trend. For that, we're going to be using the Tenkan-sen and the Kijun-sen lines. We need this blue Tenkan-sen line to cross under the orange Kijun-sen line to indicate the beginning of the pullback. And then later, the same blue line should cross back above the orange line like it did here to indicate the end of this pullback. Now, the third condition is to ensure that during this pullback, the price candles touch the super Ichimoku Cloud with their wicks without closing inside the cloud. To confirm that, you basically mark the beginning of the pullback, so from here to the end of the pullback, basically to this candle. We need at least one of these candles to touch this cloud with the wick, but at the same time, no candle should close inside the cloud. As you can see, this candle and this candle did exactly what we're looking for, which means we're going to enter a long position here. We're going to have our stop loss aligned with the yellow Kijun-sen line, and the reason for that is because most of the time, swing lows are usually too far down to be used for stop loss placement. For the take profit, we're going to go with twice the risk, letting the trade run and take profit. Now, for short positions, we're going to do the opposite. Now, the first condition is to ensure that the market is in a bearish trend. For that, you just make sure that the super Ichimoku Cloud, this one right here, is colored red and that the price is trading below it. This indicates a bearish trend. Now, condition number 2 is we want a pullback to happen within this bearish trend. For that, we're going to be using the Tenkan-sen and the Kijun-sen lines. We need this blue Tenkan-sen line to cross above the orange Kijun-sen line to indicate the beginning of the pullback. And then later, the same blue line should cross back below the orange line like it did here to indicate the end of this pullback. Now, the third condition is to ensure that during this pullback, the price candles touch the super Ichimoku Cloud with their wicks without closing inside the cloud. To confirm that, you basically mark the beginning of the pullback, so from here to the end of the pullback. We need at least one of these candles to touch this cloud with a wick, but at the same time, no candle should close inside the cloud. And as you can see, this candle and this candle did exactly what we're looking for, which means we're going to enter a short position here. We're going to have our stop loss aligned with the yellow Kijun-sen line. And then for the take profit, we're going to go with 2 times the risk, letting the trade run and take profit. In summary, the Super Ichimoku indicator by Lux Algo uses the super trend and the ATR to adaptively signal entry points in various market conditions. It emphasizes strategic pullbacks within identified trends marked by distinct cloud colors for directional trading. Now, if you're interested in this particular strategy, remember to do extensive backtesting and forward testing to see how profitable it's going to be over a longer period of time. That's basically everything for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.